Welcome to 15-Minute Fundamentals, where we break down crypto projects and learn about the drivers behind the data you see on our charts. Today, I'm joined by Joe Flanagan, co-founder of Maple Finance, a lending protocol built for institutional borrowers. Hey Joe, welcome back. You were brave enough to be the first guest on the show, and now you're back for more.
Thanks, mate. Yeah, great to be back.
Yeah, I've been looking forward to this because last time we spoke, you ended the session with a bit of a teaser about exciting upcoming updates to your tokenomics, potential new borrow verticals, going multi-chain, etc. So looking forward to touching on everything you've shipped during the last few months, which have been pretty busy, and then what the focus for the rest of your year and onwards will be.
Yeah, absolutely.
As there's been so much going on, do you just want to quickly start by summarizing maybe the main updates of the last 3-4 months?
Yeah. So lots happening in the last 3-4 months, and especially in the last 6 weeks or so. Big things from a product perspective is that we shipped xMPL, which is the teaser that you were referring to. And so what that's enabled is for participants that are owning MPL to be able to participate in the protocol more actively, where they can take a more active position where they're staking their MPL and receiving xMPL in return, and able to receive or participate in treasury revenues. Then more broadly, in terms of the context of the market, there's been obviously lots happening in the pools, and we can probably delve into some of the details there later on.
Awesome. I mean, let's start with revenues, as they've become even more interesting, especially for holders via the launch of xMPL. Now, looking at your total revenue development on the key metrics chart here, the market's nosedive isn't really that visible. Now, this is mainly made up of interest payments flowing to lenders as we're looking at the total revenue. And if we look at the revenue share chart below, we can see that your protocol revenues, so new loan originations, have slowed down and almost paused completely, actually. So could you walk us through the drivers behind the recent developments with your revenues?
Yeah, sure. So, the big thing is for lenders in the pool is that borrowers that are consistently across the board market makers and high frequency traders in the space are repaying their interest on a monthly basis. So every 30 days they're coming to the protocol, making one of their interest payments, and that's what is a consistent flow of funds into the pool for the lenders. From a protocol perspective, we make revenue when we issue loans, and so there has definitely been a pullback in lending appetite. And we've seen across the space, big liquidity rush where everyone wants to run to the exits and move into cash. And that's existed on Maple no differently to everywhere else. And so the big thing there is that we're facilitating the withdrawals as best as we can. And it's not really up to us, right? The smart contracts operate as they will. And the protocol design has held up really well throughout this turmoil. Where participants who want to withdraw are getting lined up through the cooldown process, but throughout this whole process, they're still earning all of their MPL rewards and they're still making all of the returns on their interest repayments. And so, from a protocol perspective, we're really focused now that we've kind of gone through this turmoil and things are slowing down a little bit or stabilizing more, is that we want to get back to issuing loans. We think there's a lot of appetite in the borrower market with some of the strongest borrowers in the space. And so we really want to get back to lending to them when these rates are attractive and when this opportunity exists, given that there's been broader pullback.
Yeah, these pullbacks have quite an effect on your protocol revenue as you only take a share of loan establishment fees and not withdrawals, etc., right?
That's right. The only revenue for the protocol currently is, or the majority of the revenue, the strong majority, is through establishment fees. So when a loan gets issued is when we make revenue. And one of the big updates which we just released last weekend, was released on chain a little bit maybe a month ago, but we moved from it being that it's a upfront establishment fee, being like at the origination point is when we make all the revenue, to each interest repayment being a portion of the establishment fee. And so we've shipped that now. So we're going to move from, if you think about it, when a SaaS company moves from being an upfront establishment fee to being a subscription as a service. And so that's what we think of ourselves longer term, is being a platform fee where borrowers and then longer term other participants are paying to participate on the platform and leverage all of the exposure and other benefits that the platform's providing.
Yeah, okay. That sounds great, especially from a borrower's perspective. I think it's always good to kind of split that establishment fee. And good for Maple as well, as we'll probably see cash flows to the protocol even out a bit instead of having it be a bit jumpy as the case has been up until now. Now, on the distribution of this dark blue bar, so the protocol revenue, you launched xMPL staking, so you have the system in place to distribute this to your token holders and provide value that way. Could you walk us through how that works in practice?
Yeah, so xMPL was launched probably a bit over a month ago, and we saw huge adoption initially. Like the team did an amazing job. We had an internal target of getting to 40% within 2 months, and I think we hit 40% within like 8 days. And so it was an amazing effort by the team, and where MPL holders are actively participating in the protocol. And so they're able to stake their MPL, receive xMPL in return, and as part of that, they get to share in the revenues of the protocol, but they also get to more actively participate in governance. And just we think that we can then therefore leverage that active participation into many more benefits longer term. And so the way that it works fundamentally is that there's 50%, or what we've proposed is that 50% of the revenues that the protocol generates will be distributed to xMPL holders. And we bootstrap that initially with what we've said is 30,000 NPL will be distributed to the initial participants. And so we've already distributed 20,000 of that, and there's 10 more thousand to come. But the big difference on other similar models is that it's not a pump and dump type of scheme. So the MPL gets distributed for xMPL holders to earn, and it gets streamlined block by block over a period of time. And so it's incentivizing long-term participation and for people that hold MPL to be long-term thinkers on the benefits of the protocol.
Got it. And how does the distribution of the revenue work?
Yeah, so the pools themselves are in USDC and WETH currently. So all of our revenues are USDC and WETH. And so what we will do on a monthly basis is we will buy back MPL and then distribute it into the xMPL contract. Establishment fees come in, we then rebuy MPL and then distribute it to the xMPL holders. And so, whilst we're going to do that manually initially, if you think about longer term, when we grow the pools significantly in size and the number of pools, then we'll kind of automate that process and be able to distribute more regularly on a systematized way longer term.
Great. And congrats on reaching the 40% staking target right after launch, by the way. Where's that number at today?
It's still hanging around that number. I think it's in the high 30s now. So the active level of participation, which is fantastic validation for us, because it means that a lot of the people that are owning MPL are agreeing with our approach and incentivized to participate in the long term. They're not looking at it as a short term, I'll buy some MPL and sell it next week. They want to participate in the long term and buying into our vision and mission.
And let's move over to Solana, because I think that was a pretty big thing both for you guys and the Solana ecosystem in general. So how has that launch been from your perspective, and what's the current status?
Yeah. So I think when we spoke last that we were just about to launch on Solana. And so the launch went fantastically well. The team did a great job in terms of the actual execution of the technology, because it's a big deal. It's not like it's an EVM compatible chain. We're going completely differentiated to the Ethereum model. And so the way that we went about it was that we hired a team that were trying to build something similar on Solana, and then went about launching it. And so we were able to short circuit what we thought would have been a 9-month process in order to launch on Solana into a 3-month process. And so the team did an awesome job on launching. I think we launched with X margin. I know that, but we launched with around $40 million to start, which was, I think at the time, our biggest initiation of a pool. And so X margin's been a strong protocol participant across the board since the beginning. And they've assisted pool delegates previously with the way that they provide on-chain data and analysis of borrowers. And so it was a natural progression for them to become a pool delegate on the platform. And we're super excited about what they're able to do longer term with us, not just in the pool that they control, but in the service they're able to provide to pool delegates across the board. And then the other big thing that happened was that we launched a pool with Genesis. And so obviously they're the biggest lender in the space, done over $40 or $50 billion in the first quarter of this year, and they launched on Solana a pool of their own where they distributed 2 loans and started with $75 million. And that was huge validation for us in that what we think of ourselves is as infrastructure and technology, and the biggest lender in the space coming onto the platform and utilizing our technology is a huge incentive to the team and a huge motivator for us to continue building and optimizing the service and technology we can provide to these types of businesses.
And as it is a completely different infrastructure, like you mentioned, it's been its own complicated process. I wanted to ask how the profile of pool delegates and lenders, borrowers in general, differs between Maple on Ethereum and Maple on Solana.
Yeah, so the borrowers on Solana are the equivalent. We're still focused on market makers and high frequency traders in the space, and we can talk to what we're thinking about longer term there in diversifying outside of just crypto native companies like that. So the borrowers are definitely the same. In terms of lenders, we've seen some participation by parties that hadn't participated on the Ethereum side. And then it was also very important to us that we launch with another pool delegate. So we wanted to diversify away from the existing pool delegates that exist on the Ethereum side. And that's why we brought on xMargin and why they were so willing to participate, because they saw the exciting upside in participating on a different chain.
So the two major updates were the launch of xMPL and then launching Maple on Solana, after which pretty shortly the market decided to nosedive. So I think it only makes sense to quickly speak on how that affected you guys, if at all, and how have you managed through this turbulence? Yeah.
I mean, like everyone, it has a big impact on us, and we've the team's done an amazing job in dealing with it. The broader thing is that lenders in the space have been deeply affected, right? You look at all the CeFi participants, a lot of them are now either out of business or significantly reduced in the scope of what they do. We've heard from borrowers that there's been a significant pullback in lending appetite, whether it's either they pull loans altogether or it's only over collateralized options. And so we see it as being, whilst it's a short-term shock and definitely has repercussions for us in terms of the quantum of withdrawals and the ability to issue new loans, we see it as longer-term being a huge upside for us. Is that, one, it's going to eradicate people who aren't serious about building longer-term businesses, but also longer-term, it's going to show what the recent events have shown is the benefits of on-chain lending. DeFi more broadly, but on-chain lending where you have complete transparency on everything that your capital is being lent to. So I can go to the Maple platform at any time and see where my dollars are going, who are the participants on the platform, and know who those exposures are to. And that's the big difference between CeFi and DeFi. Everyone thinks that this is some broad crypto narrative. There is distinct difference between CeFi and DeFi, and CeFi is like the old traditional banking infrastructure. DeFi is on-chain transparency, and that's what we're all about, and we want to provide that transparency and infrastructure to all of the participants on the platform. And so what we see longer term is that whilst there's an initial shock, we will come out the other side of it, and we hope we'll come out the other side of it very strong, where we're one of the few participants that's able to lend capital to some of the best companies in crypto. And then we progress from there into other verticals. So we don't want to see ourselves as only a crypto lender. Whilst we've initiated ourselves through that lens, we've created a little wedge for ourselves, and then we want to expand it into other borrower verticals. So we're very keen on launching a crypto mining pool, and then going more broadly into SaaS, fintech, technology companies where we can lend to them using on-chain infrastructure. And so that's the broad landscape of where Maple is today and the huge upside that we see in the long term.
Yeah, agree. DeFi has definitely showed its strength against CeFi counterparts amidst this turbulence. Did you at Maple have any sort of exposure to Celsius or 3AC or any of these most troubled parties?
So Celsius had launched a pool on Maple, similar to the Genesis pool that exists on Solana, where they were distributing their own capital. So there weren't any other participants, there weren't any other exposures for lenders. It was only Celsius capital that was being distributed through the Maple platform. And similar to Genesis, they were using our infrastructure in order to facilitate the ordinary course of their business. So those loans are still on foot now, and the pool still exists. I think there's maybe $20 million or so of WETH, and those loans will roll off over time, and the capital will go back to Celsius. Then we also had an exposure to Babel. It's one of the known counterparties that's gone under more recently, and so they were caught up in the 3AC issues, but more broadly in the whole CeFi narrative of large liquidity issues. And so we initiated a liquidation and a default of Babel actually just the weekend just gone. And so that loss has now actually been distributed to the orthogonal pool. And so whilst that was obviously not a great thing to happen, it was actually validating in the fact that we saw how the protocol can operate in the worst case scenario. So it operated as we expected. We were able to distribute the loss evenly across all the lenders in the platform, and then move forward post-liquidation into everyone going back to earning their ordinary course of revenues, as you've seen in the graphs that you provide. And so whilst that's, as I said, a shock to our platform and not something we wanted at all, it has validated what we've constructed and the way that we've built things, and enables us to move forward. And the best thing that's still going on foot is, and this is where it's the best of both worlds, in that we have DeFi and we've distributed things through the smart contracts, but we also have the off-chain proceedings still going on foot. And so Orthogonal is pursuing Babel and participating in the potential litigation or any other legal enforcement that will enable us to recoup funds there.
On our composition chart, can't see too much of a change, but I think your explanation opened that up pretty well on what's kind of going on within these pools.
Yeah, I mean, and the loss broadly, right? This is the benefit, is that we're providing a diversified pool. So I think we came out 10 days before the default actually occurred and said, default is going to come. We expect a 3 to 5% loss. And so there's complete transparency, right? Not only from the way that we operate on chain, but from the way that we operate. We wanted to communicate ahead of time to everyone, and it ended up being a 3.2% loss, and was clearly communicated to all participants on the platform well before it happened. And so the ability for us to be transparent on chain is only matched by the way that we're transparent off chain.
Last time you mentioned that you would be very keen on expanding to pools for crypto miners. Has that happened yet? And more broadly, how do you see your pools and borrowing volume developing moving forward? Yeah.
So we're still very keen on that. Obviously, there's been with the current markets, there's a big pullback in the space more broadly, but we're still pursuing that actively, and we would be confident that we'll launch at least one Bitcoin mining pool in this quarter. And then we're also looking at other opportunities for pools that are outside of crypto more broadly. And we've seen that with these current market conditions that we would like to diversify out of being completely crypto native.
Speaking even more about the future, what's next? You published a pretty extensive blog post on the future roadmap, so you've been shipping fast, and I expect you're looking to ship even faster going forward.
Yeah, absolutely. So the biggest thing that we're working on, and I think I've alluded to it in a couple of Twitter posts, is around what we call Pools V2 internally, but really what is Maple 2.0. And so we launched in May last year, and that was an MVP, if you like, of the smart contracts. Whilst they operate fantastically well and have facilitated us going from 0 to 1.5 billion in loans initiated, there's what we've learned throughout that process we're now able to encapsulate into the next version of the Maple protocol. And so there's two big things that we've learned. One is that we need to be much more flexible in the design of the smart contracts. And so that's what Maple 2.0 is going to enable. We're going to have a base infrastructure that we're then enable to iterate and develop on top of. And so the team's in the process of scoping and building that, and we look forward to launching that before the end of this year. And then it will also bring with it some features. And so one of the big features is around withdrawal mechanism. And so we've seen it especially during the last 6 weeks, where we want equitable ability to withdraw funds. And so in the event that there is a big catastrophic event in the markets, then people are able to participate in the withdrawal mechanism equitably. And then we can look to, doing further things within the construct of our new protocol. So it could be the way that interest is earned. So currently we operate where you can withdraw interest. We want to move to an accruing value token that can then be interoperable with the space. And so there's broader things like that, which is just a complete overhaul of the underlying infrastructure of Maple that will enable us to scale into the future. And so, as I said, we go from 0 to 1 billion with the existing or the initial smart contract infrastructure. This is what will enable us to go from 1 billion to 5 billion to 10 billion to 50 billion. And so we see it as being the infrastructure that will enable the scalability of Maple longer term.
Sounds really great. I also read that you launched loan refinancing, which sounded pretty interesting. You want to explain that?
Yeah. So we actually released that last month on chain, and then just over the weekend, just gone for the web app and for borrowers to participate. And so what that enables is that currently we do term lending. And so at the end of a loan, a borrower has to come to the platform, make all of their principal repayment, and then draw down a new loan. And so what we've seen is that borrowers only want to continue borrowing on the platform. And so what we've enabled with refinancing is that they no longer have to have that capital constraint of repaying the principal amount. What we've enabled is that they can roll that into a new loan. And so we think about this in two ways. One, it enables that flexibility to kind of roll longer term lending infrastructure. But more importantly is that now pool delegates can more actively manage their pools. They can go to shorter term lending options where they're doing 30, 60, 90-day loans, and then able to refinance and roll loans more actively so that they're able to match withdrawal requests, but also more actively manage market conditions. When we're going through a bear market like this and there's such fluctuation in interest rates more broadly, is that they're able to have that flexibility to say, all right, well, I'm not going to lock you into a rate for the next 6 months. I'm happy to do a 30-day loan, and then I'll roll it or look at the market conditions when that 30-day structure comes to the end.
One last question related to future growth drivers. Last time we spoke a bit about partnerships and their role, and you also put out a blog post about Maple's partnership with Maker. Can you explain what this partnership looks like, and do partnerships like this play an important role in your roadmap?
Yeah, definitely partnerships more broadly play a huge role. So the scalability of Maple is built around the pool delegates, and so as we can partner with larger institutions, more credible institutions that bring with them not only the credit expertise but lending capital and their own networks of capital, that's what enables the scalability longer term of Maple. In terms of the Maker partnership directly, we're looking at doing it through the D3M model, which is the technology they used. And so they've pulled back more broadly on that. Like, I think they had the active one was with Aave, which they've now stopped. And so we'll continue to engage with the Maker teams. Jen from the growth team was just messaging me 30 minutes ago. And so we're still in active conversation about potentials. But that direct proposal that we made to the Maker community has probably subsided now, and we'll look at broader participation for them to distribute their capital through the Maple platform. They've done some amazing things with a small bank in Pennsylvania, and so we see the ability for them to distribute capital through our platform, going through reputable pool delegates that they want to distribute capital through, is a much better mechanism rather than having to initiate, credit underwrite each individual loan that and go through a community governance proposal for every individual loan. This way, through Maple, they can initiate a pool delegate that is then responsible for distributing the capital in the way that the community wants. And so it's just a much more scalable mechanism for Maker longer term.
Was there anything else that you would have wanted to share that viewers, investors, holders should look out for?
No, I think that's been a great overview. And as I alluded to throughout the podcast, maybe from a personal nature, I'm obviously always bullish and I'm biased on Maple, but I'm more bullish now post this crisis on Maple longer term than I was before the start of the crisis. And I think that's hugely validating to me personally, and hopefully to the team and all the participants on the protocol.
It's a great note to end on. All viewers should head over to the Maple dashboard and conduct their own analysis. Thanks a lot, Joe. It's always a pleasure having you on, and we'll probably do this again in 3 or 4 months once you've shipped another long list of updates.
Absolutely. Look forward to it.